Welcome to Zombie Advisor with James Knapp, the only podcast where being undead isn't an excuse for being unresponsive. This is the space where financial advisors and clients come together to break free from the old, slow-moving reactionary system. Tune in as we shake the dust off of outdated practices, dissect what really matters to today's clients, and tap into the brains of industry leaders who are actually alive, alert, and crushing it.
Hello and welcome to our next episode of Zombie Advisors. Today we have a special guest, the Tax Tiger.
Present.
But before we get started, let's talk about the weather. Today is January 21st, and the weather in St. Paul is a balmy 4 degrees with some snow coming down. It is glorious. Also, on this day in history, the worst performing asset class was crude oil in 2016, was down 7.2%. Put that in perspective, the entire oil market was down 8.4% over the last 6 months recently. So it was a pretty bad day in 2016. All right, our special guest, Chris Wittich, is an MBT CPA and partner with Boyum. He has nearly 20 years of experience in dealing with individuals and small business owners. Now, he's going to correct me and tell me that he's got more than 20 years experience, but on his LinkedIn, it starts with 20 years.
20 here.
Yeah, 20 here. So welcome to the show. Thanks for coming on.
Thanks for having me.
Yeah,
About time.
This is great. I know. It's only my 6th episode. We had to get such a seasoned pro, and you've done so many. I didn't want to have you on too early. Yes, thank you. So while we were talking about taxes, why did you choose taxes? Why did you choose to get into this field?
It's a good question. When I was in high school, I was looking for a volunteering gig, and you can do Habitat for Humanity or work in a soup kitchen. I wanted to do something that was intellectually stimulating. So I volunteered at a place that's now called Prepare and Prosper. They run basically Vita sites for low-income tax people. And so I was 15 years old at the time when I started. I could not drive. So my dad signed up to volunteer as well. So he had to learn all the rules because he needed to drive me there.
Amazing.
And so I started the very first year. We did returns by hand, like with a pencil, which was a little behind the times even then. And then you'd have to make a copy of the return to give it to the taxpayer. It was a little tedious. But that's where I started. And then by the time I got to college, at one point I was volunteering 4 nights a week at 3 different like clinics or types of locations. So
wow. By the time you got done with college, how many returns do you think you'd done?
Oh, by the time I finished college, I'm sure I'd done 1,000 returns.
That's amazing.
Probably, yeah.
That's amazing. Okay, so you chose to go to taxes early based on volunteering?
Yep.
That was it.
It was something good to put on my resume, and it seemed more interesting than, building a house, more intellectually stimulating, and it was. So I stuck with it, and I went to college at the U, and didn't know initially I would do tax, but just kept doing tax stuff, the volunteering, finished, and then went straight into the MBT program at the U of M, because I knew at that point, I was more interested in tax. I didn't want to do audit or like more bookkeeping, internal accounting stuff. That didn't interest me.
So you went and finished your CPA and then went straight to the MBT?
I actually did the MBT first.
Oh, you did?
Which is
unusual.
Not how they draw it up.
Super unusual.
I finished undergrad and I just kept going, and I did my MBT next.
Wow.
And then I did the CPA after. I don't recommend people go that route.
No.
But that's what I did. In hindsight, I don't know if that was smart, but
how many credit hours did you finish with? Do you know?
I mean, I had a lot of credits.
Had to be 200.
Yeah, I had 175 after finishing undergrad. Wow. And then the MBT program at the U is 30 credits.
Yeah, so over 200.
So, yeah.
Wow. Yeah. That's incredible. All right. So since you've been at Boyum for 20 years, you've done individual tax returns, and you've done small business tax returns, and you do estate planning tax returns, right? Any other tax returns that you've done international, anything like that?
Yeah, I mean, we work with international clients, but we're only doing their U.S.
Right.
filings.
Right.
But yeah, either individuals or businesses that have international activity. I work with all sorts of those too.
Yeah, interesting. So, one of the things I wanted to talk about was small businesses, right?
Mhm.
So, we both work with small business owners.
Yeah.
You have specialized in the salon industry,
Mhm.
but you work with a lot of different small business
Yeah.
owners and have, kind of small businesses, sort of small business, right?
Yeah.
Let's talk about small business owners. When you get the new tax return from a new small business owner, and so they've been getting their tax return done by, let's call it
Whatever.
another company.
Yeah.
We're not going to name names around here, but we could name names.
Yeah.
And so they're getting their tax return done, and you take a look at their 1040 or 1120 or whatever tax return they're filing for. What is it you normally notice the most that is missed by most CPAs that are doing the tax return for small business owners, or something?
The first thing I always look at is the way the owners are being paid. Especially if you own 100% of the business.
Right.
One of the things you have full control over is how you pay yourself.
Right.
The timing of it, the amount of it, the structure of it. Is it a salary? Is it more of like a commission, depending on the type of business? And then the retirement plans that you are using for yourself, like you have control over what you're setting up. So I usually start there. And if it seems like they don't have a strategy or a plan for how to pay themselves, then I'm pretty sure they don't have a strategy or plan for anything else.
That's true.
Because that's like the most basic thing. You control all of it. And if you don't have any tax planning or thought around how I'm paying the 100% owner, you definitely don't have any thoughts around
saving
anything else.
Yeah. Well, let's just say that, and I'm going to take the owner side of this. So I'm an owner. Whatever comes out of the business at the end of the day is my money.
Yeah.
So they can take it as a salary, or they can take it as a draw, or a distribution, member controlled distribution, whatever they want to do. They don't often understand the difference.
Yeah.
Right. Because it's whatever comes out of this business is mine. So what's it matter if I pay myself a salary or not? I think it's really interesting how, if you pay, let's say a business makes $100,000, okay, and you pay yourself like a $40,000 salary, you're limited in some respects to the retirement plan that you can do.
Yeah.
But you also get distributions from the business at a lower tax rate.
Yeah, without the FICA tax. So it's
right.
There's key considerations either way. I think I see my role as making sure they're making informed decisions.
Right.
If you want to if your primary objective is to put the most money you want in a retirement plan, your wages and the strategy around your wages should reflect that.
Right.
You need to understand the IRS rules around reasonable compensation.
Right.
Because that's part of it as well. But I want my clients, my business owners, to be making informed decisions. There's not necessarily a right or a wrong answer, but there's one strategy that reduces my FICA today. There's another strategy that maximizes my QBI deduction. There's another strategy that maximizes the amount I can put in this retirement plan. And there's another strategy that's really like, well, let's pick the kind of retirement plan that we want. One of the things I always ask, especially new clients, is like, well, if there was an unlimited amount that you could put in a retirement plan, if you could put $1 million in this retirement plan, how much would you actually contribute?
Sure.
And if they say $5,000, that's all they can afford right now.
Right.
You make a very different choice on all of these things if they say, yeah, I'd love to put $40,000 a year in. You just make a lot of different choices in how you structure everything.
Do you ever talk about your small business owners about living through the business, like what expenses they can run through the business versus what they can't?
I think that's one where that's an area where the business owners often do ask about.
Sure.
So I think they tend to be curious about that, and we do talk to them about that. And we talk about sort of what are the IRS rules.
Yep.
A lot of times they're asking about the car. That's the most common thing. Oh, should my business buy the car?
Right.
Okay, well, maybe. And so I think our job is to understand the tax benefits of it and sort of what's the business use percentage. And if you buy a car, this is how it works. Versus if you lease a car, it's going to work differently for tax purposes. And sometimes it's better to buy it. You get this depreciation deduction.
Right.
Other times you don't actually want the depreciation deduction. So you can either make a different choice or lease the car. So I think just laying out their options so they understand what their options are, then they can make an informed choice about how they want to proceed.
Hold up. Just a quick pause in the zombie action. You're listening to Zombie Advisor, and I'm so pumped you're here. Got a question? Want to challenge something I said? Head over to boyumwa.com or hit the show notes to find me. Don't be shy. I'm not actually undead.
What about if I had a business and I've had it for a long time, but I'm getting ready to sell the business? Would you change anything with that?
Definitely.
In what way?
So I think it's worth going through and thinking about the different ways you might sell the business.
Okay.
Are you going to sell this to private equity?
Right.
There are certain considerations that are specific to there. Are you going to end up selling this business to your children? There's very different, what you're trying to get out of a PE sale is a lot different than what you're trying to get out of selling it to your own kids.
For sure.
In terms of the pricing and, the financials and like, do you need an audit done? Well, if your kids are the ones buying the business from you, they're not going to care about that. PE would definitely care about that.
100%.
So there's just a very different approach depending on sort of who is your buyer. Are you going to sell 5% of this business to your executive team and then a couple of years from now sell another 10% to them? The approach there is different. And so I think you want to focus on the approach that's most likely while still sort of acknowledging, hey, there's, 5 different potential buyers for this business. There's different considerations. Maybe I don't want to focus on the PE ones because that's the least likely outcome.
Right.
If I own a hair salon, I'm not selling to a PE fund here. I'm going to sell to someone in my family or someone who works there, possibly another like salon owner in town.
Right.
Probably the least likely. So I think just being realistic about, what is the business worth and who is the potential buyer and what are they looking to get out of it and how can you best position to achieve your goals with those different types of buyers.
Yeah, maximizing the sale value versus trying to, benefit your kids, right?
And make it as, if you're selling internally, is your goal to maximize the value or is your goal to minimize the legal costs and the energy spent on this? Well,
potentially.
It might be like, well, I could sacrifice a little on the value if I can make this whole thing go seamlessly and make it really easy for the person who's buying in. I mean, that's if you're doing it to your kids, if you're selling it to your kids, like you want this to be an easy, quick process where everybody understands what's going on. Maybe that's a higher priority than squeezing, an extra 25% out of your own kids and selling it to them. So.
Another way that we think about it is like, let's say we have, we want to sell the business in 5 years or even 7 years. Structuring your retirement plan so you can pay yourself more, right?
Yep.
So you can put more in your pocket before you sell it. So you can sell it for less potentially and not have to stress about it. Different way to think about it. People don't often, they built this thing. It's their baby, right? They don't want to let their baby go to anybody. So they need to get paid to let go of the baby. But sometimes you can do it in a way that you're actually taking more money from the business versus trying to maximize the sale price.
Yeah.
It's a different way to think about it.
Yeah. I mean, I think of, you should be thinking about your exit strategy the day you set up the business.
Yeah.
It might be 10, it might be 20, 40 years from now. Like, who knows?
Right.
But you have to at least consider that from day one. And that might change over time. Because if you wait and it is like, oh, I'm going to sell next year.
Right.
Well, there's things you can do.
Right.
But the longer window you have to prepare for that, the better off you're going to be.
For sure.
Um,
No, I agree
so
completely.
Start soon. Start today if you haven't already.
One of the other things that you do is you deal with estates.
Yep.
And so you're named as trustee,
Sometimes, yeah.
and you do the estate tax return.
Yes.
So when you work with a business owner who dies, what's an example of that you deal with the spouse or trying to sell a business or something like that?
Yeah, I mean, I got a couple right now. You know, one is the, consider the 95-year-old, who has left a widow who's also 95 years old.
Yeah.
They have land. They don't have an operating business, but here in Minnesota, estate taxes are a significant problem.
Yes.
In a way that isn't in other states. And so it comes up fairly frequently because the threshold is really just $3 million. If you have more than 3 million, you have a problem. So, we're working on getting the 706 filed and, figuring out what goes in the family trust. That's sort of navigating the Minnesota taxes. But in that situation, we got, the widow is 95 years old. The planning that's available for them when they're not in good health,
right?
There's a limited window.
Yeah.
Right. Contrast that to the other one I have going. It's like a couple of 70-year-olds. One gets aggressive cancer and dies. The other one is healthy. Like there's no reason to think they're in the same position as this 95-year-old who's already in a nursing home. So there's a lot more planning you can do, and it's a lot of times involving the kids, and sometimes people learn the hard way. But a lot of the estate planning, there are tax strategies, there are legal documents you need. One of the things I'm always talking to people about is just the organization goes a long ways.
Sure.
One person ends up being the trustee, and they're going through their uncle's stuff or their dad's stuff, and they're like, I have no idea where these assets are.
This is a mess.
This is a mess.
Yeah.
Was their tax planning done? No, but it's a mess. And if it just wasn't a mess, life would be so much easier. So I'm going to go through this with my own parents. I'm like, we need to make sure we have this very detailed list.
Yeah.
And people got to know how to access sort of these funds, where to go, where's a copy of the will.
Yeah.
Do we have? So you start with sort of the basic stuff, and then you can go from there on, hey, we need to make sure this trust is set up. Okay, not only do we need the trust set up, we need the stuff titled in the trust.
Funded.
Doesn't do any good
if
there's no stuff in the trust.
Right.
So
no.
it's kind of step by step. And then, if it's more complicated, Greg Carlson, you can have him on sometime.
We will.
He's amazing.
Yes.
At the estate planning. So it's usually a team effort. You're trying to make sure everybody's on the same page, both the client, but also oftentimes their kids or whoever's going to take over.
Yeah, for sure. We actually have that form on boyumwa.com. You can go out and find that and download that right now. And it organizes your estate ahead of time, which is really nice to do. Last story, you also have been a lobbyist. Tell us a little bit about how you got the tip credit involved in that.
I would not take credit for that. I would say I've more picked up the ball since then. But the beauty industry has been lobbying for the tip credit for a long time. The restaurant industry has had it for 30 years or something. And I will not take credit. I know some of the people who get a lot of the credit for this. They've done amazing work. It got into the bill, the big, beautiful bill last summer. And so it's been expanded to the beauty industry. I think now we're sort of focused on the no tax on tips, which
Right.
also is big for the beauty industry. That applies to, lots of tipped industries. So
Sure.
just trying to see the tip credit is permanent, the no tax on tips is temporary.
Right.
So if there are things we can do to help the implementation, to help the utilization, to help the compliance around tips, I think that's one of my focuses now and I like to say that one of my goals is for everyone in the beauty industry to understand the tip credit and claim it properly.
Mm-hmm.
Same thing goes for the no tax on tips. I want them all to understand it and then claim it properly. And I think if we can accomplish that, it's much more likely that Congress can extend the no tax on tips. So, tax compliance and tax planning go hand in hand, and I think tips is definitely a hot topic with the law changes,
Yes.
And it's a big focus of mine.
No, it's awesome. Thanks for coming on today. It was a lot of fun. We will have you on again.
Can't
So it won't be as long, I promise. But I'd like you all to go out to Zombie Advisor and watch us on YouTube. You can like us or friend us on any of your podcast or streaming services, Spotify or Apple. And we look forward to having Chris on again in the future. Thanks for being on.
Thanks for having me.
Thanks for listening to the Zombie Advisor with James Knapp. Don't forget to hit that follow button so you never miss an episode. Want to learn more? Visit us at boyumwa.com, BOYUMWA.com, or give us a call at 651-289-6444. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Boyum Wealth Architects. The content has been made available for informational and educational purposes only and is not intended as a substitute for professional investing advice. Always consult your financial advisor or other qualified service providers with any questions you may have regarding your personal investment planning.